Hey friends, Lucian here with the Bullish Bears team, making this video on red to green moves, what it means, and basically what traders are looking for when a stock goes from red to green. Typically, red to green is usually what traders looking for doing like intraday trading or day trading. Other people look at it for different reasons, but that's really the most common for day trading is watching when a stock goes red to green for it to go potentially bullish and maybe trade it that day. So the first thing you want to kind of look at, I'm going to bring a chart over here and show you the SPX or the S&P. When day trading, it's really important to have kind of like a chart of the S&P up because stocks really run with the market. The majority of stocks run with the market, not all of the time, but if the market's up that day, chances are stocks will run with it. If the market's down with it on the day, chances are the stocks will head in a downtrend. So right here, I have Thinkorswim up, and I put this orange dotted line across here, and that shows the previous day's close. So whenever price is above that, that's basically red to green. So if a stock is running up and it breaks above the previous day's close line, it's red to green. Once it falls and falls below, it's green to red. And it's always obviously, stocks will sometimes, as you can see here with the S&P, the S&P is trading up and down, above trading in between the previous day's close price. And once it does that, stocks will get caught up in that and obviously creates a lot of indecision. So when a stock's down here, that would be green to red, and it's down here and the market's down. But once it starts to head up here, red to green, chances are many of the stocks will head up with it. So it's always important to really watch where a stock is in relation to the day. Or relation to the previous day's close price. So previous day's close price, when price is above it, that's a red to green move. When it's below it, it's green to red. So let's show a few examples. We'll just take a few examples today. I haven't even really looked at this, so as I'm making the video, I'm just going to kind of look at some as we're talking from just some of the ones that are on our watch list. So you can see here, this one, NLNK, this one was really been bullish past couple days. But as you can see, the previous day's close line from yesterday, we'll come down here, you'll see was really at 1360, let's say. And pretty much pre-market and went above it, came back down, and right when the market opened, look at this, touched previous day's close price, then went up and went bullish. And then this has been pretty much bullish all day. This went red to green right here, kind of touched down, probably to fake some people out. And then actually you could probably see it right here, went down just for a moment and pretty much one, maybe almost two candlesticks, and then reversed and went up. So that's an example of a red to green move, and that's one that you want to potentially take bullish on the day, obviously looking at the other indicators, but price is above the previous day's close line price. So let's look at a few other examples. You'll see this one right here, MVIS. This opened up, and this went from green to red, so it was below on the day. As you can see, it kind of went down and kind of traded up above it a couple times here, and then went red to green over here. But look, sometimes it'll go up and it'll fake you out and it'll come back down, test again before it goes back up. So just because something goes red to green doesn't mean you should trade it. You got to look at the other indicators, the EMAs, the candlesticks, the volume, the news, stuff like that. So where did that one go? Why did that disappear? Okay, there we go. Oh, that's weird. I don't know why that's zooming in weird for me. Huh, interesting. That's weird. My zoom is really weird here today. So yeah, let's take a look at a couple other examples here. Let me see if zooming in. Sometimes it's better. Yeah, I don't know. I got to probably fix my chart on that one. But as you can see, the 5-minute chart, you can see it opened up down below this orange line. That's green to red. Kind of traded a little bit over here, indecision, and then it went and it kind of broke above, and then it started riding that 13 EMA. So this one pretty much red to green right over in here and kind of trended that 13 EMA line. So traders, pay attention to when stocks go red to green. So if you're looking for it to go bullish, you wait for it to go red to green, look at the pattern where the candlesticks are in relation to it, and then obviously go from there. Make sure you do your proper support and resistance strategies on when to get in and out of your positions. But green to red, red to green are very important things to look for when trading. Traders really pay attention to it. Let's take a look at a couple more examples here. You can see CDXC. This one, kind of right when the market kind of opened, it went red to green right up here, kind of created some indecision, came back down. Traders pay attention to this because, again, once it goes red to green, they might take it bullish, but then if it goes green to red, it might be a potential bearish play. This previous day support line is a really huge support and resistance area. Obviously, you want to look at support and resistance on the daily, but then obviously that previous day's close price is very important to watch because stocks will do some crazy things right around that. And again, traders will pay attention. So you can see this one went up, came back down right below it, kind of hovered down here for a few candlesticks, one above, kind of went up a little bit. And then let's see right now where it's at. It's still above previous day's close. A couple more here. Let's see. This one kind of went right up in the morning. It's just been kind of trading sideways, but it's still above yesterday's close price. Let's take a look at some ones that might be bearish on the day here and see what happened with them. This one right here, previous day here, it just kind of faded right from the start. Stayed all the way down for the day. So that's green to red. Let's see if any ones were down on the day were actually up. So this one right here, this one is down on the day, so it's green to red, but you can see in the beginning of the day, kind of had that big 5-minute crazy candlestick here. There's a couple of them that went tug of war. It kind of may have faked you out a little bit, and then, or other traders out a little bit, and then boom, green to red, and it faded. So there could be lots of tricking people. That's why you want to be careful at the open and watch the patterns being formed. If a stock is creating a good bullish pattern above, with a red to green move, that's something you want to potentially look at. Let's see here. FRTA. This one was red to green to start. So you'll start to see here, it formed up almost this flag pattern, one up here, smacked back down, kind of trailed previous day's close price right here. It's kind of tricking you a little bit here and here, and then boom, it started falling right there. So shorts will tend to come in and look and see right around these previous day close price, and once it start creating lower lows, that might be an area to start taking it down. GNC, here's another one, went up a little bit of a fake out right here, and then fell right back down and kind of just trailed down. So that you can see that previous day support line really shows with the red to green move. So if you're looking for a stock to go red to green and play it bullish, look for a close above the previous day's close price, then look at the patterns that coincide on the intraday, as well as your support and resistance lines that you've drawn out on the daily, and just pretty much chart your entries that way. But red to green, green to red, basically that previous day's price close line is extremely important to watch.